Paul, let's begin with you. They got the deal done. What does it ultimately mean for the oil market?
Well, we think that you were getting too tight. I mean, there was a real problem with the lack of supply, especially since we've seen the Libya issues, over the past couple of weeks. So on our numbers, this kind of volume increase, which is frankly what we expected, actually gets the market back to a somewhat less risky, better balanced outlook. Having said that, we now have less spare capacity, and we are at a lower structural level of inventories going forward. So I think there's high risk in the market, and this has somewhat mitigated that. But there's still less spare capacity.
How big a role do you think the President of the United States played in these production numbers that we're seeing today?
Well, I love the line that the Americans secretly asked for an extra 1 million barrels a day, and we know that.
Pretty public. They were pretty public.
That was a little bit tautological.
They were pretty public about it, weren't they?
Yeah. No. I mean, as you know, the Saudis, are huge fans of Trump, and for that matter, I guess we could just say the Russians are too. And between them, I think they've decided to try and get the price down for the midterms. It's just that the Libya situation has really meant that the oil was needed, as opposed to an actual bearish, oversupply type environment that might have been the case if it hadn't been for Libya.